Hey there, how you doing? Welcome to the channel. So, hey, today I want to do a little stock market update. Um, so, um, let's do this. Let's just we'll do a quick little update on what like the S&P 500's kind of been doing the last couple days. So S&P, you know, kind of recovered last week. I don't know. It's just still, it's all good. It's all uptrend. It's all good. XLP corrected a little. Still all fine. Grayscale Bitcoin Trust. This one got beat up. And like I had shown, let's see, I had, exited my position on this day here, had that big down day. Now it's come back up. So it seems like it may have been a takeout. But, we'll see. I mean, basically, I bought over here, I sold some here, and then I sold here. I mean, so like I'm not out of this, Bitcoin type of stuff. I understand this is a derivative. It goes to a premium or a discount depending on what Bitcoin is actually trading for. It's just a very convenient way to kind of leverage it, right? So that's kind of what I'm doing. It's like, fine, there's probably better things to do, but that's what I've been doing. So if we look at this, we can see that, it had this big correction here on the day I sold, and then it's kind of recovered and came up, but you can kind of see how it's kind of losing steam here. So if you look here, and I wonder if, let's see, do they have annotate? Let's see. Yeah. Okay. So yeah, so if you look here at this, and we're going to see if this works. I had sold on this day here, right? And so I sold there, and then it recovered the next day. So we had this nice day, and then we had this huge gap up here, and then we had this move here. Now the thing is, you can see how the days are getting smaller here. The moves are less significant. So it's kind of one of those things that so it's kind of one of those things where it's kind of losing steam. So we'll see what happens with this. It could possibly be that we yeah, it's hard to say, but that kind of looks like the setup, because if you look at this and you said, okay, so let's stop this and we go over here. Yeah, so if we looked here and I go back to this, zoom out a little bit here and do some, let's do this. Let's go further out. Yeah, so let's try to understand here. Maybe, yeah, I don't know. I mean, sort of in this range here. You're looking here at this range at about 40 on this particular thing. You had support, right? You came down over here, you had support, you bounced off, hit here, support here, you went through it, but look, you bounced off support. So you have that 40. And so now if you kind of look at it, and yeah, you had a little bit higher here, but you sort of, what's really going on? It may just be a consolidation, trying to look at it here and trying to just get some kind of a feel for what's going on. It's sort of consolidating. So now, you could, what's going to happen, who knows? I mean, maybe it'll just consolidate, go back and forth, that type of thing for a while. And then at the end of that, now it's kind of just a normal, looks to be like a normal consolidation here. So that's kind of good. It doesn't seem to be compressing or ascending triangle, descending triangle, something like that. So, I mean, it could just be a setup. It could just be a setup for like, hey, look, this is consolidating, and I don't want that. That's too much. So yeah, that could be good. And then, so, right. And then if you look kind of on a weekly chart, you can kind of see that, it is just consolidating. And if you look at the weekly, you see how there's daylight here, this huge amount of space between it and the moving averages. If you, this area, see that space, see that, the space here, the space between here is, you have that huge space between, your big moving average, in this case, your 30-week moving average. So that kind of thing. And in effect, what's really happening is this kind of now, it came up too fast. So it's consolidating. So when you have a correction, you can have corrections in kind of two ways. You can correct in a way by having the price go down. It's one way it could correct. Or the other way is, what you can do is it can just consolidate. It can just stay in a range over a period of time. And either way, you'll see it's basically kind of like a correction. And that's what may be happening here. In this period of time here, what's really going on is, you know, it's kind of just not moving. It's just consolidating range. So that kind of sets you up for like possibly something like that, you know, that it might be okay. So yeah, that's kind of interesting. So, okay. And then the other one, like I need to talk about is Tesla. Okay. So Tesla, you know, I had bought some and I did sell it. I sold it. Earnings were yesterday. Today's Tuesday. So let me update this. I don't have the exact number. So, okay, so I think this will be the title of the video, Paper Hands. So I paper handed this. I basically had bought it and I talked about it. I bought it and I kind of wasn't paying attention. I'm like, oh, earnings are coming out really quick. So basically I bought it and I sold it here. I think that I probably lost a little bit of money. I can check the numbers, lost or made a little bit of money. But the idea is I just didn't want to hold it through earnings. It went down, but it didn't go down a lot. I mean, that's no big deal. A 5% drop in this thing is still above the 50. It's really a no big deal. So, but I did paper hand that one because it wasn't the game I was playing. I'm trying to play this like as it's swing trading, trying to play, you know, it's technically, hey, it's getting some buying power, trying to play that. And you can't guess what's going to happen on earnings. You really can't. It's just, it's risk, right? So yeah, so that's what I did with that one. And it's something I'll look at again, you know, for buying in the future, maybe. Let's look at some of the high beta stuff. Enphase, I think, it reported, and I'm not sure what happened to them after hours. But yeah, this one, once again, actually, this one really had a raging move the end of last week, and it really came up above the 50. But what did it do? Yeah, after hours, they kind of got smacked a little bit, I guess. So today, they must have reported, so they were at 171, and they dropped all the way to, they're at about like 160, 159. So yeah, they got whacked. The problem, you know, the problem with these stocks, I mean, that's the problem. They're priced to perfection. And if something doesn't go perfect, then, you know, people are going to sell. And that's kind of what happens. So Churchill here, this one is the weak, one of the weaker ones. This cannot get above anything. And not much going on after hours with that. So that's okay. So, yeah, so I don't know. I guess, well, you know, I guess the Fed's going to be out tomorrow, so we'll see what happens. XPEV, you know, this one, it just never made it, right? This one, so now we can see strength versus non-strength, right? We can see how, let's just throw that one away. You know, we can see how, you know, the red line, the 50 here, the, you know, XPEV never really got out. I mean, it tried to come out of here, tried to come out, but it couldn't really get above the 50. And so you kind of have this downtrend line forming. Sure, it's sort of setting up as what a descending triangle, right? Lower highs like there. So if I, so let's see if I can do this. You're going to let me annotate. Yes, annotate. Yeah, so you can see here, lower highs, right? So I'll just circle them right there. And it's not complete, right? And then, but you kind of have it's holding in this area. It's holding this particular position, right? Are you guys seeing that? You guys aren't seeing that, are you? J Bravo alert just came up on my screen. So I don't know. Hopefully you guys aren't seeing that. But that's fine. You should check that guy out. So yeah, I can see here, this is the descending triangle. So normally, you know, people can debate what these things are. I don't know. But it's normally sort of bearish, right? You have a positive element. It's holding. It's not making new lows. Negative element, it's not breaking new highs. So it creates that dichotomy, that kind of thing. And it's sort of actually sort of bearish, right? It ends up being bearish. I mean, if you look at this, there's very little like encouraging moves on the way up. The main moves are on the way down, big red bars on higher volume. So that tells you it's kind of not really a good setup. And so that's it with that. So yeah, so, ooh, I didn't clear my annotations. So what do I have? Let's see, annotate. And let's clear all drawings. Okay, good. All right. and turn that off. Okay, so yeah, so I think that's all I wanted to update. I just wanted to update my weakness on Tesla, my paper handing that one. It's my badge of honor because it opposes the Meet Kevin style of like your high conviction stocks and going all in and doubling and tripling down on what high conviction and well, go for it, dude. You know. You've never been through, like, I started trading in the late 90s and I remember like this is old guy talk, but I remember that thing going up. I remember the NASDAQ going up. It was just, you couldn't lose in the NASDAQ in the late 90s. I mean, you just couldn't, you couldn't lose. And what was really cool about it, so back in this time in the late 90s, what was really cool at, at that time was that, you would see stuff it would kind of every sector would have its turn, and then this final move here, right? So it was you have let's see what's going on here. Come on, I think it's gonna let me do it. Wait, come on, gun, son of a gun, come on. Yes, annotate. Okay, good. Yeah. So here, like in the 90s, I remember I was like. So I'm an old guy. So I graduated college in 90, right? So I graduated in 90. So that was back, back that way a little bit. And then I came out to San Diego in, God, when did I come out? I think it was 96. And so I started working in the tech industry and like right here in 96 in this area. And so I remember I think I was working in General Instrument or something. And yeah, and they got bought out eventually as something by Motorola, I think it was. And their stock went like crazy and all this stuff happened. And, so it was just, it was cool because it was a lot of money, but yeah, the market just going up and up. You had this kind of little 98, this correction in this area here. I mean, it's a big deal at the time, but looking at it now, it's nothing. But I mean, those are big moves. And yeah, so the NASDAQ just kept pressing up. You had this kind of ascending thingamajigger here. And then this final phase going into 2000. So that was just crazy. And what would happen during this time is like, I remember you'd be like looking at different stock groups and you're like, oh, what's going to go next? What? It's sort of like Wall Street Bets now. Like Wall Street Bets, you're like, hey, what's going to go on now? What are they going to, they did the thing with GameStop and they're like, okay, what are we going to do now? We're going to do silver, this, that, and that didn't really work out yet. But at the time too, it was similar type of thing. It was like, okay, what are they doing? It would go from like, a lot of it was tech companies. And then it'd be like, okay, then it would go to like the infrastructure, like the Cisco's of the world, or then it'd be the early internet guys, the pets.com. And then I remember it was like, oh, I had semiconductor semiconductor companies. Yes, I had semiconductors, but I was thinking superconductors. They were like superconductor technologies, all that stuff. And yeah, it would you just wait your turn. It would come to your group and your little $5 stock would go to 30, but you had to sell it because it wouldn't last very long. And yeah, then it just broke, then it broke here. And the thing here is it took a long time. Like this whole thing here, look, this period of time from this initial break was March, April of 2000. And it didn't really start breaking down until, this point here. So it really didn't start breaking down for like, 6 to 8 months later. And then it really kind of kept going. So, it takes a long time for this stuff to happen. So, so I think what's happening now is certainly more severe than that. And I guess the question is, and what was going on then is there was a lot of money going into tech stocks because of the 2000 thing. And it was certainly overplayed, but definitely, a lot of companies were spending a lot of money on it for sure. In the year 2000 was because everything used 2 digits, right? Two-digit numbers for the year. And that was never really a problem. Like think of going back to when computers started and all that stuff. If you think about it, when did computers start and like start becoming more? I mean, really wasn't until the 60s was the earliest, 70s. And then you can go watch all the stories about, Apple computer and all that stuff. And if you you know, if you look at that stuff, you know, that was happening in the 70s and then, you know, the 80s. And so during all that time, you know, everything was 19 something, right? 1970 something, you know, even into the 80s. And then voila, all of a sudden we get to 99. And it's like, all of a sudden it's like, oops, it's a problem because, you know, when you go back to early computers, you know, to represent each digit here, you would need 8 bits normally, because it'd be ASCII or something, or BCD, and normally it's 8 bits. So, you know, when you didn't, you know, in the 70s and 80s, like if you look at the stuff that, you know, Apple computers had, and this is, you know, and this is also part of the problem, like if you watch those documentaries, how like he was trying to get like type fonts and stuff like that in there, and why he got so much resistance is because that stuff takes a lot of space. And they basically designed all the computer systems to only use a total of 16 bits. They'd only store these 2 digits, right? Just the 2 digits up there. And because they're like, well, thinking about it now, it's, well, just, you know, add a couple, 2 extra digits, which is another, you know, 16 bits, because it's 8 bits per digit. But that was a lot back then. I mean, that was like a lot. Even hard disks were like, you know, in the kilobytes and stuff. So it's just a lot of space. So to save money, and it's more than to save money. It's like they didn't really have a way to store that stuff. And, you know, I mean, really, you know, you have to understand it's not just money. It's also about you didn't have the money, and you're storing all your dates. So think about it. Every file that you have, every time you go in there, you have to store the dates for the year, all the way down to some kind of like seconds or something like that on files on a file system, so that you know, you can tell when it was changed, et cetera. So it does add up. But yeah, so basically when you get to 1999, it's like, whoops, all of a sudden you go to 2000. It did cause some problems, but I mean, most of the problems were mitigated. There was really no big problems on this rollover. But the thing was, they spent millions and millions and billions of dollars like preventing that, you know, trying to cover that. Because basically what happens is, you know, all your programs like think now, oh, they don't think it's 2000, right? They think it's 1900. So if it's 1900, you know, you can imagine, like literally there's all kinds of stuff calculating interest payments, blah, 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 when the loan's going to be paid off, and all this financial stuff, you know, ATMs, all that stuff's going on. And if you just flip the date back, you know, it could easily cause problems. In the end, it didn't cause problems, but they spent a boatload of money in there. So that was kind of what was going on back in those days in 2000. So there was a legitimate, you know, spend of money going on. But whatever we have going on here, who the heck knows, you know? I don't know. I guess, you know, they just keep pushing money out. And what will be the only determinant of, you know, how long the Fed can do this is really just inflation and rates. And I know that, you know, it's so funny because you listen to people like me, Kevin, and he's just really just stuck on inflation's low. And of course, there's plenty of experts you can go to. I mean, he has, you know, he has data and surveys from experts that say, you know, hey, you know, we expect inflation to be low. Inflation's not going to be that high, and it's going to be. And of course, the Fed is like, oh, it's going to be transitory. But you know, this is really significant right here, this area right here. There's a very significant thing happen here in the short term, very short term. But what significantly happened here is that, you know, this thing over here is, you know, the interest rates came off. They had reached about 1.75% in this area, and then this area, and then they came and they sold off, and that kind of eased some of the pressure on the market. But look at, they found support here at the red line, which is this guy over here. You can't see it, but it's the 50-day moving average, and that's a big, like, short term to intermediate term, 50 days, the big one. So yeah, that's potentially, you know, it's going to be interesting, because I think that, you know, we're going to get back to this situation where, you know, I wonder what's going to happen with the Fed this week, which I think is tomorrow, but a 2-day meeting. So I don't know when the press conference might be, not tomorrow, but the day after. But that's really going to be the key thing, because if they can't keep inflation under control, which they have to talk it down, and they're trying to talk it down. But I had that, you know, I had that video that I did and I did this video on where they interviewed people, and average people, like there is like 70 something plus % of most people were concerned or somewhat concerned that of inflation. And so that means the Fed is losing the game. So, you know, what's the difference? We have the spokespeople versus real people. When you look at spokespeople, the experts, the economists, they all kind of go with the Fed. They're kind of like, hey, you know, it's transitory. We don't expect this to last too long, and they can come up with whatever reasoning they have. But when you look at the average person, they're not so sure. So we'll see what happens with that. And that's kind of interesting. That's really interesting. So I'm just noticing that on the chart right now that the interest rates found some support here at the 50. Because, and then it's lining up with the Fed tomorrow. So that's just something to kind of take a note of. Because like, if you think about that, you know, see what's happening here, you know, looking at a longer range chart here, you know, we're talking about, you know we have this resistance in this area, right? So we kind of look, this is our resistance. What is resistance? Resistance, we saw the chart trading over here, you know, it found an area, had a support and cracked through. So the support in this area around 14, which is 1.4%, that support broke and it becomes resistance on the way up. And now here it didn't really resist much, but you can see that it resisted. Just think of it as a whole area, right? The resistance at the bottom of it and at the top of it here. So you can see that we did find some resistance there. And, you know, I don't know. I mean, I'm not prediction. This is not financial advice, but, you know, you just kind of wonder, is this a situation where we're going to consolidate here? So if we're in this position right now and we are possibly consolidating, so who knows what happens, but, you know, if we consolidate, you know, kind of move around, and then what's going to happen? Well, you know, then at some point, you know, there is the break, you know, could break down, which would be, you know, good for the markets, or it could break up. So, you know, we don't know, and we can't really predict. And I know there's people predicting that. I know, like the Van Meter Bond King dude, he's, you know, he's calling it for it to go down, and he has valid reasons, I think. One of the reasons, I think, is because there is a pretty big short interest, and that's kind of, the short interest is what's helped propel the rates up, if that's the case. But, you know, the question is, you know, well, is that going to do it? You know, is there really that much of a short interest? Is it? I don't know. I mean, who am I to judge? Or is it, you know, I don't know those reports, commitment to trader reports, et cetera, et cetera. You know, you have to kind of be careful. The whole market is growing at the whole time. So, you know, is it percentages? Is it absolute values? You know, you kind of have to be careful. So I think that's it for this one. I think I've rambled on long enough. So paper hands on Tesla. I'm proud of it. That's it. Bye.